Hi, this is Zak Mir from Master Investor with a look at some bulletin board hero stocks on Tuesday, the 27th of January. Starting off with Forte Energy, where we see progress after the recent 200-day moving average break. That's shown here in black at 0.26 pence. Always that much more bullish when we have a break above a falling 200-day moving average. Second time lucky here, we had the spike through the 200-day line in December and then the failure. But the good news here is that we've got consolidation in a sort of bull flag above this feature, and we've also broken the December flag, the December peak at 0.37.5, which looks significant as well. At least while we're above that, there should be a decent push towards the old 2014 resistance in the top of this rising trend channel from 2013 at 0.8 pence. Plus, at this stage, really only back below the 200-day line is seen as outright negative. Probably the best stop loss in the first instance, an end-of-day close back below the December peak for people who are a bit squeamish about these stocks' near-term prospects. Next up is a stock which I've been holding back on looking at, was waiting for the shares to find a floor. Obviously, it's taken quite a while. Even now, we're not, obviously absolutely certain that the worst is over, but there is an interesting technical angle here in the sense that if you look in the RSI window, we've seen a break of this extended September RSI resistance line that was around the 40 mark. And that, along with the decent sort of bullish divergence with this higher low here, is probably going to be enough to turn the shares around, at least in the first, or at least in the intermediate zone, maybe the next 2 to 4 weeks. Initial target here, the 50-day moving average at 2.05 pence. Stop loss back below maybe the 10-day moving average at 1.35 pence at the worst. And but we still have this problem that unless or until the 50-day moving average is broken consistently, maybe a weekly close, this downward sweeps in September does risk reasserting itself. And next up is a stock which I haven't covered here before, the intriguingly named Plutus Power Gen. The situation here is it looks as though we've got a sort of gradual turnaround here. It's a rising trend channel here from November. Decent support just below the 50-day moving average at 0.72 pence. And also in the RSI window, we've got these multiple several support points here just around the 40 level. That looks like a pretty solid sort of technical backing or momentum driver, as is the break for the RSI back above the neutral 50 level to stand at 54. View now is that at least while we're above this sort of 0.6 to 0.65 to 0.7 pence support zone, the shares could spike back up towards 1 to 1.2 pence, which was the autumn resistance over the next month or so. Finishing up with the shares with a stock which looks as though it's finally starting to bubble up in a positive fashion. That comes in the form of Provexis. I like these multiple support points here at 0.5 pence that we've had for December and January. Sort of minor bear trap effect. There was a bull flag above the 50-day moving average shown here in blue at 0.6 pence. And now it looks as though the shares are going to attack the 200-day moving average at 0.74 pence successfully. A weekly close above this black line here should be enough on this occasion to take the shares up to 1 to 1.2 pence target over the next 4 to 6 weeks. If you're cautious on the situation, maybe wait for a proper clearance of 0.8 pence, which has been the sort of the resistance over the post-October period, just to make sure the momentum is in place. That's it from me. More updates at masterinvestor.co.uk.